March 2025. It looks ordinary on the surface. No breaking news alerts, no emergency speeches, no red banners flashing across financial websites. But beneath this calm, something historic is already happening. A solar manufacturer in Germany quietly cancels its long-term supply orders without giving a reason. A U.S. defense contractor in Virginia updates its internal strategy, adding one unexpected word: silver. 3 major Asian refineries suddenly stop accepting new contracts. And in London, a bullion dealer that's been in business for over 300 years introduces purchase limits for the very first time. This isn't a future warning. This isn't speculation, this is happening right now. And if you don't recognize what these signals mean, you are about to watch the largest industrial commodity crisis of our lifetime unfold in real time. Every major resource crisis in history follows the same hidden pattern. First comes silent accumulation. Then, export restrictions and supply fragmentation. Finally, price controls, rationing, and the collapse of paper markets. We saw this with oil in the 1970s. We saw it with rare earth metals in 2010. And we saw it with semiconductors in 2021. Now, we are unmistakably seeing it with silver. The difference this time is simple and terrifying. Silver has no substitute. No workaround, no technological replacement. When this lockdown completes, entire industries don't just slow down, they stop. The most dangerous stage of any crisis is the quiet one. Phase 1 is where governments and corporations accumulate resources without making any noise. No press conferences. No headlines, no panic. Just systematic buying that drains the supply almost invisibly. In late 2023, China stopped publishing its detailed silver import data. That move alone should have set off alarms. When a country responsible for about 1/5 of global silver consumption suddenly goes dark on its reporting, that's not about transparency, it's about concealment. India took a different path. In 2024, Indian silver imports hit a 38-year high. This wasn't for jewelry or retail demand, but for strategic reserves. The government officially reclassified precious metals alongside defense assets. That classification matters. You don't treat an ordinary industrial metal like a strategic weapon unless you believe it will be decisive for future power. Russia moved even more decisively. In early 2024, it diverted all domestically produced silver straight into its state reserves. None was exported, none was sold into global markets. Every single ounce was stockpiled. And then there's the most uncomfortable fact of all. The United States, the country that dominates global finance, currently holds 0 strategic silver reserves. Between 2005 and 2015, every ounce was sold off. While China, Russia, and India were accumulating physical control, the US was relying entirely on paper markets and the assumption that the supply would be endless. Corporate behavior confirms what governments already know. Tesla secured 7-year silver supply contracts at fixed prices. First Solar did the same. Companies like Panasonic, LG, and Samsung bypassed spot markets completely, signing long-term deals directly with mining companies. When the world's biggest manufacturers lock in their supply years in advance, it means they have seen data that the public has not. This is phase 1. The smart money moves quietly. The supply drains silently, and most people don't notice until it's already gone. Phase 2 begins when countries decide that their own domestic supply matters more than global trade. Export controls never start with honesty. They begin with justifications: environmental protection, national security, industrial policy. The reason doesn't matter. The outcome is always the same: global markets fracture. We've seen this movie before. In 2013, Indonesia restricted tin exports temporarily. Prices doubled. Industries scrambled. In 2010, China restricted rare earth exports, claiming environmental reasons, while it was expanding its own electric vehicle and weapons industries. Prices surged tenfold in under 2 years. Japan started panic stockpiling. The US rushed to reopen mines that would take a decade to become productive. The damage was irreversible. Now silver is entering that same stage. Russia has banned silver exports to countries that have sanctioned it. Mexico, the world's largest silver producer, introduced export quotas in late 2024. It's not a total ban, just enough to signal that supply is no longer guaranteed. Peru tightened its mining regulations, slowing production at the exact moment global demand is accelerating. In February 2025, 4 major South Korean banks stopped selling physical silver entirely. Not by choice, but by necessity. They simply couldn't get it. When institutions with unlimited capital and global connections can't obtain the physical metal, you know the supply is already locked down. China escalated things even further by restricting its own citizens' ability to buy precious metals through domestic banks, raising risk classifications and limiting access to platforms. The logic is clear. When the state is accumulating, it doesn't want internal competition for the same ounces. This is phase 2. Each country pulls inward. Export channels close. The global market, which we long assumed was permanent, begins to fail. Once phase 2 is active, phase 3 becomes inevitable. This is the endgame. Governments and exchanges intervene, impose controls, and shatter the illusion of a free market. History gives us unmistakable warnings. In 1971, the U.S. closed the gold window because it no longer had enough metal to back the dollar. Gold prices exploded from $35 to $850 an ounce within a decade. That wasn't just appreciation, it was a system failure. In 1980, the Hunt brothers accumulated massive silver positions and demanded physical delivery. Vaults were drained. Exchanges changed the rules overnight. Margin requirements soared. Trading was halted. People holding paper contracts were crushed. Those holding the physical metal survived. In 2001, palladium markets collapsed when Russian shipments were delayed. Futures traders demanded delivery of metal that didn't exist. Exchanges forced cash settlements. Those holding paper contracts got dollars that could no longer buy the metal they were promised. Physical holders made fortunes. Silver is now approaching that same breaking point. The registered inventories at COMEX have fallen by more than 60% since 2020. Industrial demand alone consumes roughly 1 billion ounces every year. The total accessible inventories represent only a few weeks of global consumption. When a major manufacturer publicly announces it cannot source silver, the cascade will begin. Trading halts will become routine. Delivery suspensions will follow. ETFs will announce cash settlements due to temporary shortages. Governments will impose price caps, which will create black markets where physical silver trades at multiples of the official price. Retail buyers will be shut out. Mints will face year-long backlogs. The spot price will lose all connection to reality. But why is silver different this time? Every historical resource crisis had an escape route. Oil shortages ended when new supply came online. Rare earth shortages eased as new deposits were developed. Semiconductor shortages were resolved with new fabrication plants. Silver has no such escape hatch. 70% of all silver production is a byproduct of copper, zinc, and lead mining. You cannot simply decide to mine more silver on demand. Prices for those base metals are weak. Investment is declining. New mines take at least a decade to develop, time we simply do not have. Recycling can't fill the gap either. Recovery rates from electronics remain below 20%. Solar panels lock silver away for 25 years. That isn't recycling, it's permanent removal from circulation. Substitution is impossible. Copper oxidizes. Aluminum lacks the necessary conductivity. You cannot engineer your way around the periodic table. Every major solar manufacturer has tried. All of them have failed. Most critically, the demand is mandated by law. Governments across the US, Europe, and Asia have committed trillions to energy transition policies. Solar installations must double by 2030. The price is irrelevant. The demand is non-negotiable. The supply is exhausted. This is the first modern resource crisis with no structural solution, only a price adjustment. And that adjustment will be violent. This isn't a call to panic. It is a call to recognize reality. The lockdown has already begun. Phase 1 is complete. Phase 2 is active, and Phase 3 is approaching rapidly. When Phase 3 fully activates, the price won't matter. Availability will. Dealers will be sold out. Banks will stop selling. Paper claims will be settled in depreciating currency. Only physical silver in your possession, not ETFs, not certificates, not in someone else's vault, will exist outside of counterparty risk. This is not investment advice. This is pattern recognition. History does not reward those who wait for confirmation. It rewards those who recognize the pattern early. The clock is ticking, the window is closing, the silver lockdown has begun. The only question left is whether you will act before everyone else does. Thanks for watching. If you found this information valuable, make sure to like and subscribe for more insights. See you next time.